The consumer price index numbers were released yesterday by Federal Jerome Powell. Let's take a look at what does this mean. First of all, it affects food and beverage, housing, apparel, transportation, medical care, recreation, education and communication, other goods and services. And that's the percentage it affects each and every one of them. The CPI only looks at changes for household, not manufacturing, raw materials, etc. So let's share our screen so that we can see closer to what is really happening here. Let's get a second here to share this screen. All right, now here we go. Share. You share. There we go. Now, these are the headlines because I didn't have a chance to listen to the whole speech. Most people don't. What we do is we just follow the headlines of what other news information focus on. So number one is here, Fed Powell speaks on monetary policy at the Economic Club of Washington, D.C. on the U.S. economic outlook and monetary price in a conversation, moderated by David Rubenstein. Fed Powell says message from last week's FOMC was that disinflationary process has begun, meaning that things are starting to head back to normal, according to Fed Powell. But long way to go, long way to go. It's on its way to disinflationary, but it has a long way to go. Process going to be bumpy. We'll need further rate increases. Process will take quite a bit of time. So we're not there yet. And perhaps we've had a good start to 2023, but it might not head that good into the full 2023 season. Powell says Friday jobs report stronger than expected, but shows that why this will be a long process. Jobs report certainly stronger than anyone expected. Strong jobs report shows you why we think this will be a process. Fed anticipates that ongoing rate increases will be appropriate, still have not reached sufficiently restrictive level. If data were to continue coming in stronger than expected, Fed would raise rates accordingly. S&P futures spike amid speech by Powell. Fed Chair Powell says the labor market is strong because the economy is strong. Expect 2023 to be a year of significant decline in inflation. Good that this inflation has begun without damage to jobs market. Fed Powell, there is now a shortage of workers, feels more structural than cyclical. The pandemic has left a lasting market on labor supply in the U.S. Shortage feels structural. A big part of current inflation is tied to the pandemic, shutdown and reopening. Says have not put a dollar number on a balance sheet target, not actively considering selling securities. If debt ceiling isn't raised, no one should think Fed can shield economy from effects. Fed has tools to achieve 2% inflation goal over time, but inflation is influenced by global events. Fed is completing process of getting inflation down to 2%. Now, there is many more articles here. What does this mean? 2023 started out great, started out wonderful. However, it's not going to last. Interest rates are going to go up higher, meaning that in general, whatever you're consuming at the markets, it's going to go up in price. And it's already expensive. I mean, I've seen a dozen eggs at $10, $11 a dozen. It's amazing. But this shows you how the markets are headed. Now, one other thing that I want to show you in reference before I close this out is in reference to the charts. The charts will show you here how it reacts to the numbers. Now, you can't actually see what has happened in reference to the long chart. So what we do is we zoom in into this section here and see what happened yesterday. Now, on a 4-hour chart, you can't tell, but when you look at it intraday, the daily chart, you can see exactly what happened yesterday. And you can see this here, the same thing happened in crypto, the same exact move. And that's why we're saying that although people react momentarily and it goes down low, all of a sudden it has a new high in numbers. This is in reference to the SPDR S&P 500 ETF trust. So this is a similar move in Bitcoin, as I was showing you yesterday in the video. Don't take these negative news information as your worst, but always be aware that there is information that will lead to certain reactions in the market. Obviously, if it's not affecting the whole world, if there's no war declared around the world, if there's no shortage of gas or some specific material that is needed heavily around the world, then it's not going to show in reference to the graphs. So this is CEO Trades, where money works for you. The consumer price index is worthwhile to keep aware of, and it is posted regularly every month. The next one is the jobs claims report, which will be posted on Thursday, and that is also important news. Take care until the next one.